This is Justin Pulitzer. This is my weekend review video for Sunday, November 13th, 2016. There's a heck of a lot to talk about. I am, by the way, filming this on Saturday, so I haven't seen the futures or any news that may come out on Sunday. Anyhow, after a very grueling 18 months, we finally have a presidential election result, and it wound up being Donald Trump. I had said that I thought the market actually did want Trump. There was a consensus that it had wanted Clinton, and after the election results were clear, you had a lock limit down move in the futures, which was very similar to Brexit, almost the exact same setup. You had a decline down with a few-day rally once everyone thought they knew the result, and then a large move down, almost exactly the same number of points. I think it was like 120 or 124 points in ES land, and then we wound up rallying. Why did we rally? Because Trump represents jobs, lower taxes, repatriation of foreign money, repealing and replacing the job-killing Obamacare, and a infrastructure bill. All of these are very positive for GDP and for the economy and corporate earnings. So I'm going to walk through their sort of the game has changed, so to speak. And I'm going to walk through some of those revisions and my take on where things are headed. So first and foremost, let's go through the market keys. There are 7 of them, and I have a few add-ins here that I'm going to discuss. They are kind of guest hosting. Anyhow, we had a move up in volatility preceding the election, and after the big bad event, usually these people always assume that we're going to have like one of these, like sort of one of these. That very rarely happens. It's usually more like one of these. After the big bad event happens, the fear recedes. The reason why I think people assume that you're going to have something like this is they assume a black swan, but we had a binary event with either Trump or Clinton winning, and we knew what the outcome was. It wasn't really something that would catch us by surprise. So there's some good news and some bad news with regard to volatility. The good news is that we're making lower highs in general, but we are starting to make higher lows and some higher highs inside of a wedge. So it seems as though there is a potential risk of a volatility breakout at some point. In the very short term, we're getting near the lower end of range, and I would say you could use these 2-day highs here. If we were to get over 1630 in the IV, above the 200 MA, you can see these 2 days were look aboves and fail. If you get above those 2-day high, then I think we may get a bounce in volatility. There could be some type of a pullback. The market's moved very quickly for a number of days. I'm going to show some instances, particularly in some of the commodity markets, but we have moved a lot, and the market may be due for some consolidation and pullback. Doesn't mean I'm bearish on the tape. Actually, far from it at this juncture, and I'll go into why. But it's possible we do get a couple of days of pullback. The dollar. So the dollar is not doing good things for, I guess, S&P earnings. If you take a look, we were in a downtrend, which has now clearly become an uptrend. We're getting to the upper part of the range, so as strong as the dollar has been, it hasn't really gotten to be maximum trouble, so to speak. As the dollar rises, though, that does put a crimp on S&P 500 earnings. I think the dollar is rising because we're expecting growth. That's going to be the theme. There's the real shakeup in terms of mindset, in my view, is that Hillary Clinton would have been I don't want to get too political, but this is how it is. Clinton represented more debt and stagnation, a continuation of the Obama era where we were dependent on low interest rates, very little fiscal stimulus, and more taxes and regulations. Trump is the exact opposite. So the mindset has shifted now from this sort of debt and stagnation and dependence on the Fed to a move into growth. And I almost equate it to Stockholm Syndrome, where you fall in love with your captors. We have fallen in love with easy money, and we haven't remembered a time where there has been actual growth. So I take the dollar rising a little less as a negative as long as we're going to have growth. That to me would make sense. I also think the repatriation of all these foreign earnings that are going to come at some point are going to impact the dollar. Anyhow, you can see it's a little extended. We're at the channel high. There's a little bit more room up. It may even punch through a bit, but I am going to be expecting some type of a pullback and a little bit in the dollar. Maybe it is after the Fed. It's sort of like they do the hike, which it seems fairly inevitable now, and we'll get into that. But there might be a bit of a pullback. Everyone will be longed up the dollar, and then it'll be profit-taking time. The bonds. So this is one of my concerns, and I'll discuss why. We've pretty much fallen out of bed with the bonds. This started coming down nicely, gently, and then this is sort of more like the end of the type of move. When corrections start, they start gently, and then they get extreme in the later parts of the correction, get steeper. Anyway, this was a gap and go below trend, below the 60, basically below the 61.8, although I think we were a little bit above it on this day. Let me get rid of this. Yeah, see, it was a gap and go below, and we've now been coming down fairly precipitously. I drew two ranges in with Fibonacci levels. I had thought that this area had potential to be support since it was reference here, but it was not, and it just continued on. So I'm thinking that this may have a little bit more room down, and I'll show you where I'm thinking. This area could be a pause because there's a lot of chop from here. This was really kind of the launching point of this move. So I don't know if this is just going to continue puking as it has, just considering it's already moved so far so fast. From bonds, this was 143, and now we're like down close to the 120s. It's like 122. But I think that this may have some type of a throwback bounce, maybe to test the gap. But I ultimately think we may be coming down to here, and I'll show you why. This is the larger pattern 61.8 fib, and also a larger time frame channel low, as well as the 100% check back of this move. So there could be a little, actually quite a bit more to go in terms of bonds. You can see, trying to show where I drew that channel in from. Maybe we'll just go fully extreme. Yeah, you can see from these lows, I used these highs. We did get a little bit above there, but this is the trend. Let's get now back into more modern times, 3 years daily. So I'm thinking that this may have some muscle memory here, considering we're in a large volume node. But ultimately, I'm thinking that this may want to come down to the 117s to the 114s, 15s. Yeah, that would be something else. So that's anticipating the Fed hike, and that basically would take us back to these reference lows. So that's my thinking with regard to TLT. I'm thinking it's going to go lower, but I don't know if it's going to kind of catch itself for a little bit and then go, or we're going to get a bounce first and then the Fed hike and then it goes. But this area to me seems like it would make sense since we broke the we were in an uptrend within an up channel, and now that the uptrend snapped, it seems like we are going to see channel low. So I would be a very interested buyer in TLT terms down into this region. But this does seem like it's getting a little bit steep. I'm expecting maybe a bit of a bounce or some consolidation before the move fully goes. That's causing a little bit of trouble in corporate bond land. This is the high yield HIG. So the 200 MA here was a resistance for a while. It was support here with a little bit of dangling below, and here we actually came through. I had talked about this being a short back. This was sort of, I drew a 61.8 fib here, and I wound up shorting this bounce, and I started to cover it a bit on Friday because we're coming into this gap fill and knife through the 200 MA. So I don't know if we're going to continue. If we get a throwback first, I would be interested in reshorting around this 84.81 if there was some type of a throwback bounce like we had the last time. But ultimately, I've been looking into the puts into these, and they've been getting bid. They are bid, boy. So the I saw a lot of action in the 81s. I've seen a lot of action in the 83s, all 84s, all of these strikes down. So I'll show you something that interested me. You can see where the top of this is to the low. Look where the bounce stopped at the 61.8% Fibonacci retracement. So I'm thinking maybe we get a pullback to the 61.8 Fibonacci retracement, which is 79.85, and that would be really consistent, oddly enough, with the with this move. A bounce to the 61.8, maybe a pullback to the 61.8. So yeah, somewhere, listen, maybe we stop at 83s. I can't tell you for certain, but this is just my thesis. So any bounces in this, I'm thinking, could be a bit of a short. 81s to 79, 81.33 to 79.85 are my downside targets, and after that, I kind of think the move will have exhausted itself. Now, you could see a move down like this had everyone nervous. Remember, this was sort of when oil was plummeting. There was fears of a credit crisis, and the market was not happy with this either. It was very tenuous. We were having a correction. I always hate to say this time is different, because when you have a move down in high yield credit, it usually preempts a financial crisis. But I'll propose to you that this time is a bit different, because the reason of why we're coming down. Yes, oil is weakening again, and this could be putting some strain on this and exacerbating this, but interest rates are going higher, meaning that this is coming down, not because there's a financial crisis on our hands, but because we have growth and there's more demand for money, and so on and so forth. Anyhow, that's my thesis with HYG. I do think that there's a move that we could find some support here at 83s, but ultimately I do think that we are going to wind up testing some of these fibs. So I'm looking to add back to the short on bounces here via put spreads. I had been in some, I closed some of them, and I'm looking to kind of bulk that position back up, because I do think we're coming back down. But I, again, don't think it's because of financial crisis mode. I think it's because of growth mode and what you saw happen in the TLT and with regard to the Fed hiking. Let's go a little bit deeper with that. If we were to be in financial crisis mode, we wouldn't have Dr. Copper up 15 days in a row. This is signaling. I mean, yeah, it's getting a little extended here. I'll grant you that. We're kind of getting into some reference areas. It looks like it's due for a pullback. It wouldn't surprise me to see the JJC pull back and retest the 10-day, which is roughly where this breakout was. But a move like this tells me that growth is on the way. When copper is crashing, that's when you have financial real crisis. You also are seeing it in the transports, which I'll show here. That's the IYT. You can see this is broken out. A very long-term downtrend. This formed a bit of an inverse head and a bigger inverse head and shoulders. Here, a shorter-term head and shoulders. Here was the neckline. We broke out. We got to the channel top, and we broke out. It's still some more. Transports wouldn't be rallying and ripping if we were in financial crisis terms. This is a bullish move. It may have gotten a little bit out of hand here short term, just because we've come up so far so fast. But if there is some type of a pullback somewhere down to the neckline, I would be interested in buying the dip. I'm not suggesting chasing right here unless we spend some time backing and filling and consolidating. But you can see we're through even this range high. This was a big move. Anything above 150, 128, though, I think is bullish. If we get back below there, there could be a bit of a right out short down, maybe for another $5 or so. But this to me looks bullish, and I'm in more of buy the dip mode. Look at all this consolidation. It just seems to me like this is going to want to go higher and probably retest the old all-time highs. The converse, the risk, this is all risk-on move. The risk-off play has been the chase for yield. I showed you that in bonds. This is the bond equivalent in XLU. This is the utilities. However, we are coming into some very key levels. I'll be interested in maybe scooping some of this up somewhere in the 44s or 45s for a right out play. I will caution this, and I do think that we could be in for the bottom in terms of interest rates. I do think interest rates are likely going higher. It seems to me that this is a head and shoulders pattern. So this could have a significant more move to the downside to retest the 100% move here into the 41s. But what I'll probably do, and you can see this is leg 1, this was sort of leg 2, maybe this counts as leg 2, sometimes you go 1, 2, but I'm thinking that this could go lower, but it's moved a lot quickly. So what I'd probably be interested in doing is on a move a little lower, selling these out of the money puts if there's premium. I have to take a look because it might not articulate fully to the downside. It could be a failed head and shoulders where we come back up. But nonetheless, the money is pouring out of these safe havens, these chases for yield, and flowing into interest, into growth names. Same thing could be said for O. This is another one I like. This one has come down quite a bit. It shot through the 61.8. It's kind of right around where this breakout level was. If this were to get down somewhere between 50 and let's say the channel low in the 47s, this volume distribution a little bit lower, and also the trend line, this to me would get interesting for a right or right out buy. This was a bit of a trend snap. We're into some key support. It wouldn't surprise me if there was some type of a bounce, particularly if the market is to have a bit of a pullback. But ultimately, I do think that we may retest these levels. I like the idea of selling those out of the money puts if and when they do get juiced. Money is also flowing, and if there was financial crisis time, we wouldn't be ripping in the XLF. Banks would be getting crushed. They'd be, on the chopping block. I want to show you something. 20-year monthly. Look what this has done. This has come back to sort of the financial crisis breakdown level. So this might be, I would have been more concerned about this being a kind of a short point, but look, we came up to the 61.8. It had a pretty nice correction down to the 50-week moving, is this the 50-month moving average, sorry, and held and is now back up. If you look at this pattern in a daily chart, this is not a long enough time frame. Let's do a 3-year daily. Look at this. I mean, you're through all these highs. We've now come up quite a ways, and I think we're into some, like I said, a little bit of nosebleed territory short term, but I'm thinking that I'm not really looking to start shorting these highs. I'm more looking to buy the dips, like the retests of the breakout areas. If this were to come back down somewhere into like the 20 area, I'd be interested in, maybe buying the dip in this XLF play. Could see this across the board in like JP Morgan. This one is way ahead of its skis right now. It's at a longer term. I'll show you a 20-year. Is this a weekly? Yeah, you can see we're at the channel top here. This is way extended. Probably an okay right or right out short, but longer term, I think the stock is likely going to 99.44, which is the 1.618 Fibonacci extension from the peak back in 2000 to the financial crisis low. You can see this has spent a very long term, kind of a really large rounded bottom. And if you go into a more weekly chart, this is just a huge up move. So I'm looking for this to pull back a bit. Maybe it gets back down to retest this sort of breakout area in the 70s, but this could just hang out up here for a while, consolidate more by time than by price, and then just kind of ride the channel higher. JP Morgan tends to have these touches and then fairly dramatic pullbacks. I don't know if we're going to get a move back down to the channel low so quickly. Maybe if the Fed doesn't hike rates or something along those lines, but I'm thinking that this is probably going to now be a reordering of thinking and a buy the dip stock when it does wind up pulling back. However, short term, this is way overbought, and I would not be chasing JP Morgan up by the channel high. This could go full bust out, but you have to think about trade location, and I don't think the trade location right there is perfect. Goldman Sachs also really rather strong. This was a head and shoulders breakdown. Now we're back up above the right shoulder. This has come up really big from the bottom. I had a lot of people asking me, is it time to short? Is it time to short? I'm a little low. Like I said, I'm more into the buy the dip camp, but for a short-term play, if this continues up to the downtrend line, I would be an interested right or right out short player or somewhere up in these twos, the higher twos. So particularly if there was like a gap up or something on, again, I mean, this has just gotten almost parabolic. So I'm really not looking to short these financial names. I'm more looking to buy the dips, and I'm talking more longer term time frame. But short term, there are definitely going to be some trades in here. Maybe buy some put spreads or something along those lines. You can see we're really extended from these moving averages, and either this is going to have to spend some time chopping for a while, consolidating, and letting them catch up, or it's going to have to come back down a little bit in price. So I think that these names, this is sort of the ghost of Christmas future. We all know, I could safely say now that the financials are back in play, but they have definitely run really far, really fast, and I would not be in the mood to be chasing these things right out of the gate like this. Oil. So this is one issue that I'm noticing. I had originally thought oil would probably rally into the OPEC meeting, which is on the 30th. However, news came out from Iran that they aren't going to play ball, so it seems as though the expectations of an OPEC deal on November 30th are now kind of quelled. We're into a reference support area. This was the old resistance. It should now be support. The more times we bang on it, probably the less support it'll be. I don't love that we closed a Friday bar below a hammer. Let me see, the low here was 43.07. This is 43.03. So we closed below a big hammer and below the 200-day moving average. You can see here we did spend a little bit of time below there, and then it rebounded. The 200 isn't, I mean, you can see that this has spent a lot of time moving back and forth between averages, but we're below the 50, we're below the 100, and now below the 200. So I'm a little bit cautious. If this were to do something like snap, this could even come back down and retest these lows at 35s. There's a 61.8 there, the reference low down here, and the channel low. So if we lose these 42.49s, I would say that we're probably going to test the 39 low again at the very least, and potentially even come back down and retest into the 35s. So this is kind of do or die for me, 42.49. As long as that holds, I'm okay with, trying to play the bounce in oil. But if we lose there, it's a GTFO situation and probably a short. XLE not looking all that terrible, oddly enough, given the pullback in oil. This is like I had proposed in the last couple of videos. Has just been to me looks like a consolidation funnel, which means that it's kind of building a base, sort of building a following, if you will. So I'd be interested in this if this were to continue down, and I'd buy it on the channel low. It's roughly around where the 200 MA is too, around the 65s. We're roughly holding the 50 and 100 MA here, so if you were to lose this 1, 2, 3, 4, 5 day range below the 68.54, then I think there's a right out short down to the channel low in the 200 MA, which you could do via put ratios or put spreads outright. FXI is not looking pretty, but again, a context, Trump has been talking about labeling China as a currency manipulator, right? This doesn't necessarily have to do with their economy. He is going to kind of make American businesses more competitive, and if China has to raise their currencies, this might be a bit of an issue. And you can see we're below the channel. So below 50s, I've said gets hundreds. Below hundreds, I think gets 200. So I think that there could be a move down somewhere between the 200 and the 50% fib of the range. So I am expecting a little bit lower in FXI. It may have a bounce up first. Often you have the channel break, the retest, and then go. But this, to me, as long as we're below this range, this was the kind of the look below or the go. So I really need to see that back up above 36.80 to say that it was a look below and fail. So back up above basically the 100 MA. Keep it simple. BABA not acting well. they had really good earnings again, and the stock didn't act well. I think this is just a function of we moved up so far so fast that it just got overbought. And I had said I thought around close to the 110s was going to be it. I know a lot of people were looking for the 120s. I pulled the ripcord up here. It happened to be quite prescient. It's now coming back down. We have a gap fill and a channel low and a 50% fib and a 200 MA between 87s and 84s. I think that area is probably going to be, that was also kind of the breakout. So I think that area will be a buy the dip if you want to do it kind of the chicken hawk way. I love chicken hawk ways. Sell like the 78 puts. That's the 61.8 fib of the range. So I'm thinking around here there's going to be some muscle memory. Short term, below the 100 to me is weak. If we were to get back up above, I would say that this was that the gap here held, that we basically came down. I wouldn't surprise me to see the bounce first and then the rollover, but I do think that this area is likely to be tested in the next few sessions. But 93s here have, the low here was 91.26. The low here was 91.10. So if you want to play right, like let's say Monday is an up day, if this were to get over 94.09, I think that was this low. I think that there could be a bit of a play back up to the upside, but I'm looking more to kind of buy it down here. So, and particularly with FXI rolling over, I'm not looking to, say that before the gap fill, but I do like the idea of starting to sell some out of the money puts. I'm going to have to pull that series up in the next couple of days. See this 86? This area was such a big key level. I would love to see a retest of that breakout area. I think it would be actually healthy for the stock and a great opportunity to buy the dip. IBB, again, a reordering of thinking here. Came, not yet, I should say, but we've been playing this game, 100% moves back and forth. Hillary, we know, was going to be more punitive with drug companies, biotech, limiting stuff. I think Trump has actually said kind of similar things, but I think he's got bigger fish to fry right away. I don't think that's going to be top on the agenda. Maybe with the reordering of Obamacare, but it seems to me that he'll be more favorable with these drugs. Maybe they get to extend patents or what have you. As long as it's above this 50 and 100-day moving average, I'm okay with a bit of a look. You're above the 200, you're above the 100, you're above the 50. As long as these 3-day range kind of holds, I'm okay if you want to try and dip the toe, but I'd really feel more comfortable to see the actual range break out, see some kind of actual range extension. So you can see we kind of had a bit of a look above. This could actually, believe it or not, be a bit of a secure high. So we have to be a little careful here. Yeah, so I'll keep it simple like that. I like the idea of using these 2 days. If you can get above the range here, the 294.36, I think we extend back up to the 301. If we lose, I wouldn't even mind seeing this kind of drift back down a little bit and then trying right out long off the 50-100 MA, considering it held here. It might kind of hold again. If that weren't to hold, then I think we're going to come back down and fill the gap. So that's my thinking with IBB. A stock I've been watching is Alkermes. I had been talking about buying this way back down here, oddly enough, and it got the gap fill. It gapped up. We came back down, got the... Hold on, let me zoom in. Yeah. All right. So we came up, came back down. We now have a trend line within a channel. So we got the upper channel now twice. So it's holding. I'd be interested in maybe buying this for a right out trade somewhere along the trend line. If that were to snap, though, we know to be out, because that means this could even come back down and fill some of these gap areas. This was on Drug News, so it seems I don't really think that this stock should have ever been down this much. Honestly, this is a fantastic stock, Alkermes. They make the opiates and all that stuff. So this is just getting back, and I like the idea that this is now touched a couple of times. So it seems to me that this might be in play back for a move to the upside. Yeah, so 54-ish, that area. That this low here was also 54.80, so right in that area. If this were to come back down, I'd be interested in selling some maybe puts below there into the like the 50 strike. So that's my thinking. Where do we want to go from here? Let's do the S&P and all that good stuff. So first and foremost, I don't talk about the Dow very often, so let's talk about the Dow, DIA. This is their ETF. This is at an all-time high here. You can see you had a protracted decline down, and within a couple of days, you're now above the old all-time high. That is rather impressive. This move is obviously extended, needs some time to consolidate, but again, it seems as though the move is now from those sort of like the tech stocks in the NASDAQ, the FANG names, into these industrial names, and I'll talk about a few. I like, by the way, the DIA, Dow. Let's stay consistent in on pullbacks now. Yeah, so as long as this is above 86, 88, I think it's okay. If it were to come back down, I would have to play around with some of the. Let's play around with the fibs, although. Let's do it. Fibonacci retracement. Let's zoom in. I'm trying to get a little better at zooming with this thing. It's not making it easy. If this were to come back down to 183, so somewhere between what was this exactly? Yeah, 183.73. Is that right? Let me just make sure the points are right. Yep, that's right, and that is correct. So if this were to pull back, I'm okay with a half-back move. Look where that would take you, roughly where these highs were. So anywhere into that 83 area, I'm okay with kind of buying the dip for a right or right out trade. I think this may be a little bit extended, but extended can get more extended. Boeing, this is something that was an early tell. I mentioned that this was a buy the dip stock now when it had this pullback. I'm sorry, this breakout move. Let me zoom in. All right, I'm getting a little better with the charting feature. So this had this big breakout. You had I said wait for the pullback, it got it, and now we're playing up above those highs. So I'm okay with Boeing long as we're above 146.19 now. Yeah, this breakout area. So you have 2 days worth of range. So I like it maybe long above the 2-day and maybe short below that 2-day for a little bit more of a pullback maybe to the 10-day. But in general, I am kind of constructive on these stocks. Caterpillar, another one of them. I mean, this is like listed by just about every hedge fund as their number one short, and it seems to me that the stock is looking like it wants to rally, and it could even get back up to into the hundreds. Let me show you this on a longer-term weekly chart, maybe 20-year weekly. Look where this came down to, the 61.8, and now it's rallying back up pretty strongly. We got now the 61.8 retracement, but in the shorter term, this looks to me a little bit more bullish because, look, you had this move up, which got pretty close. You had 1, 2, 3, 4, 5 weeks down and one bar that took it all back. So this to me, one of my buddies refers to this as a seller's shut-off pattern. Yeah, this is pretty impressive. I'm okay with being long Caterpillar on pullbacks as long as about half of this bar holds. So do the math on that. Anywhere in this area, I'm fine, like the 88s-ish. We could even be, if we want to be 88, 98. I like it as long as we're above this old bars high here, which kind of is above the bodies of this whole range. So yeah, that area to me, as long as we're above there, I think that this may have some room all the way up even to this 105 or wherever it is at that point. So Caterpillar to me is looking like it's part of the Trump trade, right? The Trump train. Deere also looking rather bullish. You had this big reordering a move of the stock. I talked about buying this at the 61.8. It pulled back, and now we have a trend line to play against. So yeah, I like plays against the trend line, but anything in my view above this 88, these 88s, and this again, it to me is starting to get a little bit more. There could be a little bit more room up to the 94s. That was this breakdown. If you could get through there, I mean, maybe we get back all the way up to the 100, but I would be more inclined to buy this on dips than I would be to chase, but I do think that all of these stocks look like they want to go higher. The S&P 500. Oh, by the way, for the Dow, the DIA, it's looking for a $2.66 move, so 191.13-ish, 185.81-ish on the downside. SPY. Let's zoom in 3-year daily, and we'll zoom in a little bit more relevant. I have a lot of markings on this chart just because I use it a lot. So a couple of things to note. One is this. We had a channel breakdown. We punched into the channel. We came back down. So this could, if we do stall here, maybe be it for the SPY. This could be a secure high play. And you have equal lows, 115.22, 115.32. So if you lose these lows, these 2-day pullback range, I'm sorry, the 2-day range, the 2-day range here, I think that we could have a further pullback, maybe even to retest the 50 MA at the very least. I drew in a Fibonacci retracement here. I would think that we could see somewhere between the 50 MA and the 50% fib is my guess. Maybe it presses lower to the 61.8, which would be back down to the 112s. But that to me seems like it would be giving back a lot more of the rally than it probably should, and I'd be a little bit more cautious. So I like this range here, this day's range. Anything above the high, which is 216.70, I like a move back to the upside. Anything below the 2-day lows, I think we can have a right or right out short here to a retest of the 50 MA. Why is the 50 MA so key? Look, we had a gap below. We tried to get over it, couldn't. Here it did, but couldn't sustain. Again, retesting, couldn't go. Every test here we had, it couldn't, and that's when we had the pullback. Now we broke out over the 50, so I'm thinking that we're kind of still okay as long as the 50 MA holds. So anything above the 50, I'm still okay with playing by the dip. If we lose the 50, then I'm thinking right or right out shorts for a move to either the 50% fib or maybe even at the extreme at the 61.8. But yeah, that's my thinking. As long as we hold the 50, it's okay. It's all, just consolidation. But below the 50 to me is no good. Why am I a little bit more constructive? Because of the Dow that I showed and because of the IWM. The S&P, just so you know, has a lot of international components, and that doesn't always play so well. The IWM is more domestic. Honestly, I don't even think I could name a stock in the IWM. The small caps, I'm half kidding there, but the way to play this, to me, in my view, is with IWM. A couple of things to caution about. First and foremost is we've now come up from the bottom and we're coming to the top. Remember my box? What was the box low? The box low was 114.29 and the box high is 129.10. So where did we stop here? 114.88. So basically to the low, and now we're getting very close to the box high. Look where the 1.272 is, if you take from this range up, it is roughly about at the high of the box, a little bit above. So I'm bullish IWM, but I don't like that we came up from the bottom and now we're coming to the top of the range. This could go a little bit more short term, but may need a little bit of pullback before I feel really safe. The 1.618, by the way, would be up to 132.68, which I do think is highly likely, actually. But short term, and when I talk short term, I gotta call that tech support, right? Talk about sellers being shut off, right? I mean, look at this. You're over the top in just a few days. I mean, this was so many weeks of mulling and consolidation and a channel breakdown. Look at this. We got back to the channel with this big candle and then powered through it. So that to me says that IWM is in bull market mode. Very, very impressive. Look at this. closed this big kind of Marubozu candle, not a full official Marubozu, because Marubozu candle just means you open at the dead low and close at the dead high, but I consider any of these big body candles with very little wicks basically Marubozos. You got to the backside of you had the breakdown, back up to the old channel, and then powered through to new highs. So this to me is a buy the dip situation. If this were to even come back to the 50 MA, look where all that support was before the breakdown, I would be a buyer on the 50 MA. But yeah, this to me looks very, very strong, and that's why I'm sort of more optimistic on the market than I've been in a while. The expected move this week, by the way, in the yeah, I mean, look at how many weeks of pullback. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. I think this wound up being like, if you go from peak to trough, it's basically 7 weeks worth of pullback. I mean, it's incredible. The expected move this week is $2.81, so that would be up to 130.17 or down to 124.55. So 130.17 would be, I guess, up to here. Very possible that we do get a move. Maybe we even get the 1.618 fib extension. The 124s would be roughly into the breakout area, so of these highs. So that makes sense to me. We'll see how that plays out. Qs, that's been the laggard, right? This has been kind of rocking the Casbah for a long time. The Qs, and the reason why I think the Qs have been weak, and let's keep this box here in mind. We had a push into the box, which rejected a move up, and now we're retesting. You really need to be above that box high, in my view, which was 99.36. So that's going to be very key for me on any move back down. Look where this, let's zoom in. I'm a little too far out. Look where these lows stopped. 113s. These are 113s. So this is a very key level. This was 114.20. So we are, I thought this was actually, this can't be right. Hold on, what was the high here? Yeah, I'm sorry, I was incorrect. I was looking at the low, the 114. So this area, to me, is very key to be there. You can see that this didn't feel comfortable there. It only closed one day. We got above it, retested, and now down. So this bar, this big days bar, is now my standard bearer, considering we have roughly held the 100 MA, and we closed at just above the old high of 115.75, the reference breakout. So these two bars, these 2 days, are very key to me. If anything below 114.20, I think is a right or right out short for a move down even to the 111s. If we can get back up above the 118.38, then I think it's sort of Miller time and we're off to the races, and this is probably going to catch up. That's going to depend a lot on the momentum stocks, the sort of the former leaders, if you will, Apple being first and foremost. So let's discuss Apple. This pressed down. This looked like it was trying to hold and to rally back to the upside. This now came down, but we're roughly holding the 100 MA. The gap here almost filled completely to the 105. So I'm going to use this bar's range. Again, 111.09. Anything above there to me is back off to the races, probably to 115s to test at least into the gap. Anything below this 105.83, I don't know that the gap fill here is going to hold anymore. I would assume that we see the 50% fib here at 104s and maybe even the 61.8, which is the 100 level. Why is that key? Look where this really broke out from. This was a gap and go above there, but this was really the true breakout level. So you have lows down here in the 102s. So if we lose the 105, this low, this 105.83, I'm thinking this could see 102 to 100. That is my, and maybe even press still lower, maybe even to the 96s. But that to me seems like a little bit of a reach at the moment, and I'm just going to, I don't always assume end ranges. That's a huge issue. I always assume level. I just take it from level to level and see how it goes. 200 MA here is obviously going to be key. Look at this. It couldn't get above it here. It struggled with it here. We've kind of struggled with it here. It held basically. So 200 MA to me seems like where we'll stop, and that's the 50% fib. and we're down a heck of a lot. So Apple, to me, seems like it may have some lower to go. Like I said, this could be a very quick short down to here, but if we were to get somehow back up over the 111s and clear these, like, what was this, 112, anything, I'll say this. I think if we hold the 108s, we'll probably see the 112s. If we lose that area, the 108, basically the 100 MA, and this low of day, the 106.55, and here I think we're coming down into the 200 MA. So that's my sort of shtick with Apple here. Amazon is doing, listen, I painfully told people that we were getting into the end of the run here. I said 833s, maybe would get an 855 move, but anywhere in here, it was time to go. And I had so much resistance. People were like, no, it's going to 1,000. And I kind of said, yeah, it might, but not this time. What am I doing here? All right, so we're getting into some key support levels. We lost the 50. We lost the 100. You know what I say, when we lose 50, we get 100. When we lose 100, we get 200. Look where the 200 is, right where the breakout came from. This is a very, very big level, and it's a first measured move. Like if you took this move down to here, that is the first measured move, and there was a bounce that got nearly to the 50 MA. So these 2-day lows, I even like just using this kind of consolidation day. Anything above 743.26 I like as a long, but if we get below the low, the 728.90, then I think we're going to come down here into these levels. And if we were to do a full correction, the full 222 points or whatever, that could even take us down to close to this gap fill where the 61.8 fib is. We do have one channel low there. We happen to, I don't know how long this would take to get here, but we have two channels. The less severe of them is roughly around that 50% fib. So what am I thinking? I'm thinking that there may be a little bit more downside in this, but short term, like if we were to get into this gap area, this breakout area, the 696, what I'll probably start doing is looking to sell like some out of the money puts at the Fibonacci, the 61.8 Fibonacci levels around those 600. I have to see what the juice is going to be. I don't know if it'll make sense at the time, but I have to see. So as we press into this area, I'm thinking it's an idea to start selling out of the money puts. We are coming into the holiday season. I do think Amazon is going to benefit tremendously from that. I know there's some fear about like Trump putting in legislation and stuff that will be punitive to hurt Amazon that may be coming down the road. I don't think that it will be anytime soon. So like I said, if there's a move, this could be it. Maybe just because there's a measured move doesn't mean it has to do it every time. This was a big breakout. I do think that there could be a bounce here first. So I like this consolidation. It's a fairly narrow day for a stock like Amazon. So short below the low and long above the high. Keep it simple. And as we come into this 200 MA, I like to BTD. Facebook is starting to look like it's really breaking down potentially. We broke a very long-term trend. We're right on the 200 MA. This is the key. Let me zoom in. I'm going to keep it really, really simple with Facebook. 200 MA is the key. We're right at the 61.8 of this range. And the breakout, the 117s. So I really need to see it hold here. If it can hold, it will come back up and likely fill the gap. If it cannot, we are probably going to come back down to 108s at the very least to fill up the triangle from the entire range. Look what we're doing though. We gap below and we've struggled now. We can't get back up above the trend line. So I'm a little bit more short-term bearish on Facebook. I also can't tell you how many people I know, this is like the biggest position in their portfolios, and they're dying underwater. The bears have it on them. Facebook reported a fine quarter, but they lowered their guidance basically going forward. So numbers, in my view, have to maybe come down. So I'm thinking that we may have a bit more to go with regard to Facebook. Short term, I like this range. This is a big hammer, so maybe even use the 2-day bar here above the 120.70, which take a look here. This reference high above 120.70, 120.79, I think could be a play for a long back for a quick day for a move back to the 10-day. But if we lose this low, this let's just say the this was 118.15, but if we lose 117s, I think we're in for a bit of a tussle, so to speak, to maybe even 108s, and I like put ratios or put spreads for a move down into that area. I will say this, we are starting to get very short-term oversold. We're not overdone on the stochastics, but I am thinking that there could be lower, but I don't know how much lower for the time being. This area will be very key. You can see there was a gap here, a reference low. To me, I think that this area is likely. I think it will likely support at least the first time around. Yeah, that's that. But I will say this: there comes a time in every stock where it peaks. I don't know that we're there in Facebook, but I will say that I don't like the idea of the ad revenue slowing. So this 200 MA, I'm going to keep it real simple. This was very key. It's been for a while. If we lose the 200, we lose this range, it to me is starting to change the character of the stock. So 200, 117s, this area must hold. If not, we see 108s. If it does hold, we should bounce back up quite violently, maybe even to refill the gap, which was 127. Netflix. This was just a simple case of coming up from the bottom. It got to the top of the range. It's testing into the gap. I would be an interested buyer. I don't even know if you're going to get the full gap fill, but if this were to get to like 106s, I'd be interested in selling out of the money puts, like in the 99s, which is basically where the gap fill is, where in the 200 MA. You can see the 200 MA was really where this kind of fell out of bed. It struggled to get over it. It couldn't get over it here. And it's now bending back up. So, like I said, we have a 50 rising dramatically. It's roughly around the 50% fib. If this were to continue down, I'd be into doing it. I don't know that that's going to happen, but I can just say for my own speaking, we're into the gap a bit, and maybe it partially fills to the breakout area, which is roughly the 50% fib, and I'd be looking to sell those out of the money put somewhere between the gap fill and the 61.8. And the gap fill, the full gap fill would be to 99s. So I like selling the 99 puts if we get to 106.7. It's 106.90. So I'll keep that pretty simple for everybody. Google, they reported they did a great job, right? The quarter was good. I thought this was going to go up. It made a slightly higher high. It closed very weak and now has come down quite a bit to the low here. You had a bounce and now you filled the gap. So this is the must-hold area between the 200 MA and the gap. If that were to fail, we have a larger term 61.8 here around the 736s. So it needs to hold here. If it fails, I think we see 736s. And that area, I would be interested in selling out of the money puts. Look, we have a kind of an old regression line there. So I think that this area to me will represent a lot of value, and I'd be looking to sell puts that are like somewhere around somewhere between the 100% fib of the 672s to like 690s. That to me would be a really, really large move near the channel low, near reference lows. It to me seems like it would be basically we came up from the top. I mean, the bottom. We got to the top. Now we're coming down from the top to the bottom. I think that area would be some solid support. So I'll keep it simple. Again, this day's range above the 777.29. I like long. Below the low 765.54. I think could get the 200 MA. That's like a really kind of quickie test. But thinking it may want to see the 736 if that's the case. That's Google. And Tesla. Let's end maybe on Tesla. I still like selling out of the money strangles on this. This has come down quite a bit. The problem for me with the Tesla, right, is that they need subsidies. Trump hasn't been so subsidy friendly. They also need to get a capital raise out of the way early next year. So I think this is sort of dead money for a while, and it's just kind of going to list around with short squeezes and pukes. 200 MA has been the resistance for a while. It was support, now it's resistance, and I'll tell you this. Until you clear the 200 MA, it is a short. So if this bounces up to the 200, it's a right or right out short. I like selling calls above the 200 MA and puts below the range. Basically, if you just take a look at the ATRs, the average true ranges, I think you can play with those. I don't think you're going to get too cray-cray out of those ranges. Famous last words, but that is my thinking. Anyhow, the play has been to move out of yield plays and growth names, these FANG names, because they were the only game in town for a while, and now we could kind of go into other names now that we know that the economy is going to likely get better. But I'm expecting a bit of a reversion trade for a little bit. Some of these stocks have come a long way. There may be some type of a bounce. So I don't like the idea of chasing like stocks like I should, like Goldman Sachs and these stuff all near these highs. I want to wait for a pullback. And I do think that there is going to be a bounce trade to be had at some point in some of these FANG momentum names. They've gotten really abused. There may be a little bit more to go in them, but I am mindful that they have come down a lot. Anyhow, that's my story. I'm sticking to it. Please leave me some comments. You guys and gals help me make my videos better. If you like the video, hit the thumbs up. I always like that. If you're not following me on Twitter, my handle is @JustinPulitzer. Anyhow, that's my story. I'm sticking to it. Have a great weekend, rest of your weekend, and cheers.